This sub $20 stock has been outperforming over the past month, but I believe over the long term it still has room to run. In this video, I'm talking about why several analysts recently raised or initiated buy price targets, why those targets might fall soon, what we learned from their Investor Day presentation, and a check back in on their valuation after the recent run up. Let's do it. What's going on, everybody? My name is Matthew, and today we are talking all things Zuora, ticker ZUO. I talked about this stock about 1 month ago when it was still in the mid 13s, and I made the argument that Zuora has an inflection point right now, just like several other turnaround plays I've previously invested in. And after watching their most recent Investor Day, how they're developing their ecosystem, their new sales strategies, new management, and interviews with customers like IBM, Chegg, and Zoom, I am only more convinced that this is where Zuora starts to turn things around. Give me the format. First, a 45-second refresher on what is Zuora and what do they do. Then I'll try and condense their 2.5-hour long Investor Day presentation into just a few minutes. Then we'll talk about the new fiscal year 2025 projections, which is actually 2024, where they see 25% subscription revenue growth rates. Finally, we'll look at the valuation, new analyst price targets, a bit of technical analysis on where I think Zuora might go next, and much more. And if you don't mind, smash the like button before we dive in. What I was trying to say is, if you don't mind, smash the like button for me before we dive into this, because these videos do take many hours to put together and research. I love doing it though, so all I ask in return is you smash that like button, subscribe, and turn on those notifications. Let's get into it. First, we're going to do a quick 45-second recap of Zuora and what they do. If you use any subscription services such as Zoom, HBO, Chegg, newspaper subscriptions, there's a chance that Zuora is the one powering it from behind the scenes, because subscription business models can be complicated to manage and build, and the accounting can get really messy. So Zuora's suite of products helps businesses automate all of it and provide powerful analytics to act on. So here are some of their customers, including DocuSign, Zillow, Caterpillar, VMware, Zoom, and much more. And on top, you can see just how far their reach really is. Zuora is a pure play on the subscription economy, and recent studies actually show that over 60 to 70% of much of the world's population has begun to prefer usership and subscription over ownership. Now, obviously, through this investment, you can tell that I personally believe subscription is the future, not only for SaaS companies and B2B, but also for B2C. So that's the 45-second recap. If you want more on the initial thesis, go ahead and click that video right there, but everything here on out should be new information. All right, let's break down this absolute beast of a presentation. So first, Zuora fully recognized their decreasing revenues and acknowledged that their product was too hard to customize and simply not scalable. They lost momentum because of these three scale challenges, but now Zuora revenue is fixed, their enterprise go-to-market or GTM strategy is now working and scaling, and their product is not only simpler, but they have a new Chief Product and Engineering Officer, Sri Srinivasan, to drive innovation. Now they can continue up and to the right on this S-curve. Their new product strategy has become all about the Zuora Central platform. The middle circle is what they want to bring all of their customers onto, and the outer ring with billing, revenue, and collect are how they bring these new customers into their ecosystem. This is what they call their land and expand strategy. So these are the three main products that were on the outside of the land and expand strategy, the ones that are meant to attract new clients. And I want to highlight just one thing for each of these products. With Zuora Billing, I like how they have a subscription first, not subscription only strategy, which essentially means that they can support billing for both subscription and non-subscription kind of one-time purchase products. This expands their addressable market, how many customers they can serve, and makes it a much more robust solution. Let's just take a little breather here before moving forward. Okay, ready? All right, let's go. Zuora revenue allows companies to close the books on their accounting in literally a fraction of the time compared to competing products. And Zuora Collect was completely revamped last year with some new AI capabilities in which they can increase successful payment collections by as much as 20%. And that 20% saves companies enough money for Zuora Collect to pay for itself. And all it takes is one click to deploy Zuora Collect if you don't already have it, which is great. Makes it really easy to get more entrenched into the Zuora ecosystem. So again, those three things we just mentioned bring everyone onto hopefully the Zuora Central platform. But what is the platform and why is it so great? Well, because right now, this is what a lot of product workflows look like. It's all linear and you're collecting data on maybe the product, inventory, costs, and that's about it. They're collecting the wrong data, when really subscribers should be dynamic. They should be able to add or subtract different features, and we should be able to collect data from hundreds of different points to better the user experience. So one of the coolest features of the central platform is that it collects all of these data points, measures it in real time, and uses AI to take immediate action. And it will continue to iterate this over and over again to see what is improving the experience and what is not. I think there's a potential for this data and analytics to even tell Zuora clients, hey, you should try this new product offering and see if it works. And this is where Zuora's brand new Chief of Product and Engineering Officer really needs to step up and lead innovation for the company. And from what I hear, he's really shaking things up and doing a good job of that so far. So right now, I'd say we've only covered about 40 to maybe 50% of the entire Investor Day presentation. But for the sake of the length of this video, I'm going to explain their new go-to-market strategy in another video. So be sure to subscribe because what they're doing is pretty great in my opinion. But we do need to urgently talk about their new financial projections for the year of 2024 or fiscal year 2025. Historically, looking back a few years, their revenues just continued to decrease. But at the same time, if you look at their non-GAAP operating margin and their free cash flow margin, they actually both improved significantly in the past few years. So in other words, they've proven that they can manage the bottom line. But now they need to return to growth on the top line. So this is what they came out with for their projections. And just so it doesn't get too confusing, Zuora's fiscal year, or FY, is 1 year ahead of the actual calendar year. So for example, FY21A is just the actual financials for 2020, not 2021. And FY25E means estimated numbers for the year 2024. But anyways, they're expecting revenue growth to actually decrease once again in 2021, which was already stated in their Q4 report a few weeks ago, so there's no surprise there. But they do expect to see 25% subscription revenue growth by the year 2024 or FY25. Additionally, by then, they expect to see professional services revenue as a percentage of revenue fall to 15%. And this is a planned decrease in order to increase their overall margins because professional services has very low break-even and sometimes negative margins for Zuora. And they expect a non-GAAP operating margin of 10% plus and free cash flow margin of 10 to 15%. Now, Zuora is an interesting pick where I think it is going to eventually be high growth, but in the next couple of years, I honestly don't expect Zuora to be a fireworks show. I don't expect it to be the most crazy, absolutely blast off rocket emoji stock in the entire market. But I think the risk reward is decent. It is going to become a high growth stock. So it depends on your investing style if Zuora is the right stock for you. I don't want anyone to just say, oh yes, I'm bullish on the subscription economy. Let's get Zuora. It's going to get me 80% returns every year. I'm not sure if that's realistic for this stock, but for me, I'm looking past fiscal year 2025 or the year 2024. I'm looking past that once Zuora has already reached that 25% subscription revenue growth rate, and that's where I think the real gains are going to start kicking in. Now finally, let's take another look at their valuation after this recent run-up. We'll take a look at some new price targets, and we'll take a look at their chart because something big just happened. So the last time I covered Zuora, I used the next 12 months total enterprise value to revenue since Zuora is not yet profitable, and I compared it to Oracle and SAP because they both specialize in ERP systems or enterprise resource planning, which competes with Zuora's products. The crazy thing is that yes, Zuora is seeing declining revenues, but it's still growing at roughly 15% per year, at least from here on out. But meanwhile, Oracle and SAP are both behemoths that are just trying to grow a few percentage points a year. And even still, based on this metric, Zuora is cheaper than Oracle and just barely higher than SAP. But the story changes a little bit if we look at the price to sales ratio or PS ratio. We see in order of highest to lowest, Zuora is trading at a PS of 6.68, while Oracle is trading at a PS of 6.12, and SAP is now at a lower 5.22. And looking at these three charts, one could potentially make the argument that maybe Oracle is too stretched after this rally that it's been seeing, and it might come back down to the mid fives. If it does that, then Zuora would look more fairly valued against these competitors based on the PS ratio. After Investor Day, Zuora saw two new price targets for $20 a share, which indicate 15.41% upside from today's price, and I'll share why that might just happen relatively soon. But not everyone was impressed. Jefferies and Needham kept it at a hold, and the bigger banks like Goldman and Morgan Stanley haven't even touched their price target from 10 months ago. But if Zuora does get an upgrade from any of these bigger names, expect some big moves, because Berenberg Bank's initial upgrade sent the stock flying 12% in a single trading day. So imagine if a name with more clout gives us an upgrade. All right, so now let's jump into their chart. Right here is a chart of Zuora's price action since they IPO'd, and each candle represents one day. And if we zoom in here, this is actually from June of 2019. So almost 2 years ago, they saw a massive drop here. But after that drop, you can see that there was a resistance, a very clear resistance, right around the 1650, 1660 range. And this is a resistance that held true for almost 2 years now. And just recently, if we zoom in some more, Zuora was able to break this resistance. And that is amazing because it's something that they haven't been able to break for the past 2 years. So this is kind of proof, to me at least, in my opinion, that we are indeed at an inflection point. This, if you just read this stock chart as a story, this is their declining revenues. This is probably their revenue integration failure. This is their lack of innovation. But now we're starting to see a move upwards. This is the new the new management coming on. This is the new team being built, the new sales strategy, the new products and innovation, right? So to me, this is kind of convincing that, yeah, Zuora is kind of turning a corner. And what's even crazier, and why I think that $20 price target might get almost filled kind of soon, is because there's a gap on the chart, a massive gap from 1980-ish down to maybe the 1680 range. And gaps don't always have to be filled, but oftentimes they are in technical analysis. So I'm pretty sure every trader or everyone who charts up Zuora sees this big gap here because it's so huge, and we could see this gap get filled up to that $19, $20 range. And we also saw a gap filled on Celsius. Just to give you guys an example, we saw this gap here that was filled just a few days ago, just this past week. So to give you an idea of what I'm talking about and what you might be able to expect from Zuora in the short term. But I am a long-term investor first and foremost. This is just short-term speculation, not really my specialty, just something I wanted to put in here as a bit of extra fun. So to recap, I think their valuation right now is probably fairly valued and not a screaming buy like it was in the mid $13 range, but I would still consider it for a long-term hold. And I think that analyst price targets, well, I don't really give too much weight to them because in my opinion, analysts kind of just chase the stock price around, but if they can move the stock, then I'll pay attention. And then that was just a bit of fun technical analysis towards the end and give you guys something to watch out for. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, turn on those notifications, and check out our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.